What's up, everybody? It's Hey John. I jabber opportunities nonstop, and today, right now, in this video, I will be discussing the housing market, and I think it is going to be phenomenal news, folks. If you've been looking to buy a house, well, guess what? This is a news you want to hear about. So we're seeing ZiLLOW, yes, ZiLLOW.com, the real estate company that has tons and tons of data across the United States, all 50 states. They have data of everything. How many beds, how many rooms, square footage, you name it, they got it. And recently, ZiLLOW has incorporated a program where they're going from an IT company to a real estate company. What does that mean? It means that we're going to see an ZiLLOW, and that means that ZiLLOW is trying to buy property, and they've bought property already. They bought about over 6,000 properties across the state, and they currently have 4,000 inventory right now. And now they're announcing, we're taking a pause from buying additional property, and we are looking to offload our current inventory. Well, ladies and gentlemen, what does this mean here? It simply means that ZiLLOW is done. They are done buying property into interim. And why is that? Because their algorithm, which is logic, it tells them whether or not they can buy property using all other data. But you have to remember, folks, the stock market is very liquid. What does that mean? It means that you can trade thousands of shares of stock for the same price. But in the housing market, it's hyper local. So say, for example, you're in a block here, right? And that one house sells for, say, $10,000. And then the next house over sells for, say, $15,000. The new price of the homes of this area and whatever size it was before, say a 2-bed, 1-bath, it is now $15,000. So what does that mean, folks? It means that the algorithm currently being used by ZiLLOW is overpaying for property, and I am continually seeing ZiLLOW reduce their price over and over and over, price reductions. I've seen some homes in San Diego where ZiLLOW bought it for $1.1 million, and they reduced it, and currently it's going for about $950. So ZiLLOW is taking a $150K haircut, and even though ZiLLOW has raised tons of money through their stock and all kinds of avenues, well, guess what, folks? When you're losing $150K on one property, that's a lot of money for you and I. But extrapolate that to 4,000 in the current inventory. $150K times 4,000 in terms of losses. Just extrapolate that in your mind for a little bit, folks. I will summarize for you. It is a lot of money and a lot of losses. Don't forget, folks, ZiLLOW is a publicly traded company, and they have to answer to the shareholders. What do you think shareholders are going to say on the next and many other quarterly reviews of the financials when they say, oh my God, you're buying property for $100K and you're selling it for $90K. What in the heck is wrong with you, buddy? Your algorithm sucks. I'm going to start selling the stock because you're garbage, right? So that's kind of why ZiLLOW has said we're pausing and holding on to our current inventory and looking to liquidate, aka move their inventory from their books. And why is this so significant, and why am I covering it? Because if you're looking to buy a house, again, I want to re-emphasize, ZiLLOW has data across 50 states. Every parameter of data you want, they have it. And if they are stopping to buy the housing, guess what? That means that we're seeing a possible peak in the housing market. Because why would you stop buying if you could flip it, right? Because the algorithm was designed to buy and flip. And guess what? They bought. And now they cannot flip it. Now they're stuck holding heavy bags, and they're looking to push it out slowly but surely. So this means you're going to get some good deals courtesy of ZiLLOW if you live in those areas where they currently have inventory. So if you want to check it out, all you got to do is go to ZiLLOW.com and look for ZiLLOW listings. And you go to the listings, and whatever state you're from and city, you're going to see a bunch of listings with price reductions over and over and over. You may be getting good deals, and it means the housing market is starting to turn. And it means that people are currently priced out. And that means you can't afford it. So guess what? If you can't afford it, well, if no one's buying it, including corporate America, that means prices are going to have to come down back to reality. because again, real estate is very local. But these big hedge funds and these big monies are going around buying everything because they can leverage tons of money very easily because people just give it to them and then they invest it for them and they bring up returns. And when you cannot bring returns, folks, well, guess what? People are going to start leaving your fund, and then there it goes. Bye-bye. So again, I wanted to re-emphasize, folks, we are seeing a turning of the housing market. We are seeing reports of negative 1.6% housing starts. And what does that mean, folks? That means that we're seeing less household formations. We're seeing decreased mortgage applications. So this tells me folks are pushing the brakes and they're stopping and saying, you know what? This market is crazy. I'm not going to play into it, and I'm not going to go into it. I'm not going to pay for it. And now it is being reflected in the mortgage applications and the housing formations. Usually when you form a household, guess what? That means you're married, you're having kids, and you want to buy a house right here, right? But guess what? If everyone and their mom is making minimum wage, well, you can't really support a family on minimum wage, right? So that means we're seeing decreased household formations. And on top of that, forget even starting a family, man. How are you even making a living on minimum wage? Especially in California or New York or any of the big cities here. Maybe in, say, Texas or Florida, maybe possibly, because it's a cheaper cost of living. But in California, New York, Seattle, the big cities, well, it's a very tough deal. So don't forget, folks, real estate is hyper local, and I believe we're seeing a top happen right now, folks. This means in the near term, again, when I say near term for real estate, it could be literally years from now, but we're seeing a top, and we're going to start seeing price reductions most likely, even though there is still a supply shortage. Well, guess what, folks? Even if there is a supply shortage and you cannot afford to buy it and no one's buying it, they will still have to reduce the prices. And when that happens, folks, people are going to start selling, and people are going to list their house and sell for cheaper because some of these folks are looking to get out, because some of these folks may be in the foreclosure process and they're thinking, okay, you know what? Maybe I'll get a job and cover my foreclosure, yada, yada, yada. Or why don't I just sell for a little cheaper and just get out and walk away with some profits? Because I can assure you, almost anyone who owns a home today, and they bought recently, when I say recent, even in the last year, you are almost guaranteed to be up in your house. So if you cannot make those payments, it makes sense to sell, right? And don't forget, folks, we're seeing the eviction moratorium being taken away so people can be evicted. And guess what? How many of these landlords do not want to deal with toilets and tenants anymore? And let alone not being paid for a year and some change, or 2 years even now. You're going to have mom and pop landlords who are literally suffering, and they just want to sell and get out and enjoy their lives and say, I'm done with real estate. So it's your boy, Hey John. If you're a new viewer, please subscribe and hit the notification bell. And most importantly, have an awesome day, and I will catch you all on the next one.